Hello, friends. The title of this video is not clickbait. If you receive old age security, or you're about to start receiving it, there is a number, one specific income number, that decides whether you keep your full payment or watch it shrink every single month without ever being told why. Most Canadians have heard the word clawback. Almost none of them know the exact number, or how close they already are to it. Stay with me until the end, because by the time this video is over, you'll know exactly where you stand and what to do about it. Here's why this matters. OAS isn't like a fixed paycheck. Once your net income crosses a specific threshold, the government starts taking back 15 cents of every dollar above that line, straight out of your OAS payment. Cross far enough above it, and your OAS doesn't just shrink, it disappears completely. For some retirees, that's the difference between keeping thousands of dollars a year and losing every cent of a benefit they paid into their entire working life. And here's the part that catches people off guard. It's not just your pension income that counts. RRSP withdrawals, RRIF income, investment income, even a one-time withdrawal in a single bad year, all of it can push you over that line. The Canada Revenue Agency does not call you before this happens. They do not send a letter saying, "Careful, you're about to cross the threshold." It works automatically, based on the income you reported on last year's tax return, and it gets applied to your OAS payments the following July, quietly, in monthly increments. Most people don't notice anything is wrong until they look closely at their deposit and realize it's smaller than it used to be. By then, the tax year that caused it is already over. There's nothing to undo. The system doesn't ask if the high-income year was a one-time RRIF withdrawal for a home repair or a permanent raise. It just sees the number, and it claws back accordingly. Before we go further, if you're not subscribed yet, here's a real reason to do it. The recovery tax threshold changes every single year with inflation, and most people are using a number from 2 or 3 years ago without realizing it's already moved. If you're subscribed with the bell on, you get the updated number every year, right when it's published. If you're not, you're planning your withdrawals around outdated information. Hit subscribe, and let's go through exactly where you stand. Group 1. If your net income is comfortably below $93,454, here's the good news. Your OAS is currently safe from the recovery tax entirely. But currently is the important word. Here's what most people in this group don't check. If you have a RRIF you haven't started drawing from yet, or you're planning a large RRSP withdrawal for a renovation, a gift to a grandchild, or to help pay for a family wedding, that single withdrawal gets added to your income for that year. A one-time event can temporarily push you over the line, trigger a clawback the following year, and you won't see it coming until the smaller deposit shows up. The action step for Group 1. Before any large one-time withdrawal, use the OAS Recovery Tax Estimator on Canada.ca or call Service Canada and ask, "If I withdraw a lump sum this year, will it affect my OAS payment next year?" It takes 5 minutes and tells you exactly where the line is before you cross it, not after. Group 2. This is the group almost nobody talks about, and it's the most dangerous zone, because the damage is small enough to go unnoticed and large enough to matter. If your net income sits within a few $1,000s of $93,454, even a modest investment gain, a part-time income source, or a slightly larger RRF minimum withdrawal this year can tip you over. Once you cross it, the recovery tax doesn't take everything. It takes 15% of just the amount above the line. That sounds small. It isn't, when you add it up over 12 months, and then realize it can happen again the following year if your income stays in that same range. Here's the part that catches this group specifically off guard. RRIF minimum withdrawals increase as you get older. The percentage you're required to withdraw goes up every year, whether you need the money or not. Which means some retirees who were comfortably below the threshold at 72 find themselves pushed over it by 78 or 80. Purely because the mandatory minimum withdrawal grew, not because they earned more or spent differently. The action step for Group 2. Pull your most recent notice of assessment from the CRA, find your net income line, and compare it directly to the current threshold. If you're within $5,000 either side of it, this is the year to plan your RRIF withdrawals and any investment income deliberately, instead of letting it happen automatically. Group 3. If your net income is well above $93,454, you're already losing some or all of your OAS to the recovery tax, and net income's above $152,000, OAS drops to zero entirely. If that's you, here are 3 things almost nobody in this group is told about. First, pension income splitting. If you're married or in a common law relationship, you may be able to allocate a portion of your eligible pension income to your spouse's tax return instead of your own. This can lower your net income enough to reduce or avoid the recovery tax, while your spouse picks up income that may be taxed at a lower rate on their side. This is done directly on your tax return. Most accountants know about it, but most retirees never ask. Second, the timing of RRSP to RRIF conversion and withdrawals matters enormously here. Converting earlier or later, and choosing which accounts to draw from first, RRIF versus non-registered investments versus a TFSA, which doesn't count as income at all for this purpose, can change your net income picture significantly from one year to the next. Third, if you're in this group and not currently using a tax-free savings account as your primary withdrawal source for discretionary spending, you may be giving away thousands of dollars in OAS unnecessarily. Withdrawals from a TFSA are not counted as income anywhere on your tax return, which means they don't affect this calculation at all. The action step for Group 3. This is the one scenario in this entire video where I genuinely recommend sitting down with a tax professional or financial advisor before your next major withdrawal decision, because the savings from getting this right, multiplied over a decade or more of retirement, are usually larger than the cost of the advice. Here's why this is urgent and not just informative. The recovery tax is calculated based on income you've already earned and already reported. There is no appeal for, "I didn't know this would happen." There is no retroactive fix once the tax year has closed. If you cross the threshold this year without planning for it, the clawback shows up automatically next July, and the only thing you can control going forward is making sure it doesn't happen again the following year. The people who avoid this aren't the people with less money, they're the people who know exactly where the line is before they make a withdrawal, not after. So here's exactly where you stand, by group. Group 1, comfortably below the threshold. Before any large one-time withdrawal, check the OAS Recovery Tax Estimator on Canada.ca or call Service Canada to confirm it won't push you over the line. Group 2, right at or near the threshold. Pull your latest notice of assessment, compare your net income directly to the current threshold, and plan your RRIF withdrawals deliberately if you're within a few $1,000s either side of it. Group 3, well above the threshold, look into pension income splitting with your spouse, review the order in which you draw from RRIF, non-registered, and TFSA accounts, and consider a conversation with a tax professional before your next major withdrawal. None of these steps cost anything except a phone call or a few minutes online, except for Group 3, where the cost of professional advice is usually small compared to what it can save. A quick, important note. This video explains how the OAS recovery tax works in general terms, to help you ask the right questions. It is not personal financial, tax, or legal advice, and this channel is not affiliated with the Canada Revenue Agency, Service Canada, or the Government of Canada. Income thresholds are indexed and adjusted annually. Always confirm the current threshold and your own numbers directly with the CRA or a licensed tax professional before making any financial decision. That's everything for today. If this helped you understand where you actually stand, subscribe and turn on the notification bell. I cover the updated threshold and every CPP, OAS, and GIS change as soon as it's published. And if you know someone receiving OAS who's never heard the word clawback explained properly, send them this video. The people this affects most are usually the ones who find out after the deposit already shrank. See you in the next one.